October's numbers are out for Toronto's real estate market, and it's a tale of three stories. Hi there, I'm Nawar Naji, a real estate broker in the city of Toronto. If this is your first time visiting my YouTube channel, make sure you click on subscribe and the bell button to get notified of my videos. Three things I want to discuss in this video. First is the Toronto downtown condo market. Second is the Toronto freehold market. So that's the detached and semi-detached. And then last but not least, the 905 real estate market. Let's start with the condos. So for the downtown condo market, and again, this is Bloor to the Lake, Dufferin to DVP. The months of inventory for October was up to 4.77. So if we go back a little bit, in July it was down at 2.64. So it's gone up by 2 months in the last 3 months. That indicates a jump in the level of supply in the downtown condo market from 2.64 to 4.77 months. So a couple of things are happening here, and I think this is why I believe the condo market is at a tipping point. You have a high level of supply and shrinking demand. And the level of supply has gone up, again, if you've looked at my other videos, for a couple of reasons. One is pre-construction condo completions. You have some condo owners who have sold or continue to sell their condos and buy a house in the city or the 905. Then you have people who are no longer able to rent their condos at numbers that make sense, so they've decided to sell their condos. So again, you have increased level of supply. And then on the demand side of the equation, there's just no demand. The employers are not pulling their employees down to the core. So these employees are moving to the 905, they're moving back with their parents, some of them are selling. So again, it's killing that side of the equation, the demand. So you have a shrinking demand and a spiking supply. And this is why you see that months of inventory has gone up from 2.64 to 4.77 months. And we are at a tipping point because so far, the average condo price in the core is at $740,000. So it hasn't really moved much, but something's got to give because we're getting to November and then you got Christmas next month, December and January. Those are the tough, cold months where the real estate market tends to slow down because of the holidays and that time of the year. So I think something's got to give, and this is where we might start to see some decrease in the condo prices moving forward in the next few months. So there might be opportunities if you're a home buyer who have been wanting to get into the downtown lifestyle, or a real estate investor who's looking at the markets and contemplating where's the opportunity here, when is a good time for you, the investor, to jump into the market. And that could be coming soon. January, February, end of December, somewhere there might be some opportunities to pick up some good deals in the downtown condo market. The second market is the freehold, so detached and semi-detached in the city of Toronto. Those are just moving along. It's in a healthy state where some houses are selling for over asking, some are selling for asking price, and some are being negotiated, but things are moving along. And the reason is people want backyards, people want more space as they leave the condo market. So I'll give you some numbers here. For the detached, the average, so this is the city of Toronto, all of the 416, the average detached is 1.47 million, 14 days on market, and the months of inventory is 1.48, which is pretty low. That is seller's territory. So anything under 3 months of inventory is a seller's market. The semi-detached is averaging at 1.15 million, 11 days on market, and it's under 1, so it's 0.86 months of inventory. So again, both are moving along. If they're priced well, they'll be sold pretty quickly and possibly over ask. The third market is the 905, and this is purely driven because of COVID. And there's this exodus out of the city into the 905. And I'll give you some numbers here. The 905 detached, so this is very generic because covers all of the 905, is up 18% October 2020 compared to October 2019. And then the semi-detached in the 905 is up 15.4% October 2020 compared to October 2019. This is not, straight economics, because it is driven by huge demand moving out of the city into the 905. And I have to say, and if you look at my other videos, buyer beware. There's developments in the vaccine that should be coming in 2021. Employers, I have no insight, but my guess, after looking at a lot of data, a lot of information, employers will pull their employees back to work. There's no question about it. They will not let people work from home forever. Productivity is not there. There's no human interaction. There's no corporate culture. There is no team chemistry. You can't duplicate that online. And I've mentioned this in my previous videos. So I have no doubt that yes, some employees will be able to work from home. Yes, some will be able to work 1 or 2 days out of the week. But for the most part, employers will pull their employees back to the core, back to their offices, back to their corporate culture, if you want to call it. And if you're jumping and buying a house in the 905, try to imagine this. You got to get up in the morning, get in that car, drive to the GO station, find parking, get on the GO, come downtown, switch and jump on the TTC to go to work. There's back and forth twice a day. Think of that lifestyle. How much time are you going to spend commuting? How things will look like down the line. I mean, it was only 9-10 months ago where life was pre-COVID. It seems like 10 years ago. But think of all these factors, because making a decision such as buying a house way out because of COVID, which I hopefully will come to an end soon or will be manageable in 2021, you got to think of how life will look like. And again, buying a house, buying a home so far out is not a very liquid decision to make. And what I mean is, it's not like stocks. You can buy and sell and trade on a daily basis. Buying and selling a house is expensive proposition. You have realtor fees, you have land transfer taxes, you have to break a mortgage, you got to pay legal fees, you got to do the appraisal. There's a lot of moving costs to take into account, and touch up and paint and minor repairs. So think long term, or think 2021, 2022 before deciding to buy way out in the 905 and get into these bidding wars, I should say, and pay a premium for something that might not have that strong of a demand in 7 months, 8 months from now, which is the same amount of time we have spent living with COVID. If you look at March to today's November, so that's 8 months. So another 8 months from now, hopefully we're in halfway through this pandemic. Things might look a little bit different. So again, give it some thought before jumping into the 905 real estate market. If you're thinking of selling your condo, you're not sure if you should sell or rent it, buy a home, 416-905, feel free to reach out. I've helped many others in similar situations, and I'd be more than happy to share my thoughts, insights, and analysis with you to help you make that decision. And last but not least, make sure you like, comment, and subscribe. And until next time, happy investing.